Last class already we completed types of accounts in Tally. Now today I am going to start you accounting terminology. In accounting terminology, the first topic is business transactions. Okay. So I already said in the last class, business is nothing but exchange of goods and services. When we are doing exchanging, means exchange is nothing but importing and exporting of goods. When we are exchanging the goods, we have to enter n number of transactions in accounts. So after entering all those transactions, at the end of the year, what we can able to know? We can able to know the financial position. What we can able to know? We can able to know the financial position. Financial position is nothing but whether our business is in profit or loss. Financial position is nothing but whether our business is in profit or loss. So by entering n number of transactions, we can able to know our business is in profit or loss. Like this doing of things is nothing but business transaction. Business transaction is nothing but in a business we are entering n number of transactions. After entering those all transactions, at the end of the month or at the end of the year, we can able to know the financial position. Financial position is nothing but whether our business is in profits or loss. It shows the position of the business. The next one is goods. Goods means, goods is nothing but if we are taking the goods for our personal use, those are not called as goods. Goods are those which we have to bring and we have to sold in a market. Whichever things we are selling in a market, those type of things are called goods. If we are using for our personal use, those are not called as goods. Goods are those which has to be sold in a market. Whatever we are selling in a market, those type of things are called as goods. And the third one is assets. Assets means we have different types of assets. For example, furniture, machinery, land and building. These are all our assets. Why we are calling as a asset? Asset is a thing which we have to running in our business, and on that we have to get some benefit. Whatever things are running in our business, on that whatever we are getting the benefit, those type of things are called as assets. Asset is a benefit. It shows the benefit to the business. So in asset is once again divided into two types of assets. One is current assets and another one is fixed assets. Now here whatever I written, these are all called as fixed assets. Okay, so the first one is current asset. Current asset is also called as floating assets. Current assets are also called as floating asset. Floating means it is like this, means sometimes the asset value will be increased, sometimes the asset value will be decreased. The asset value always it will not constant. Current asset, for example, cash, investments, these are all called as current assets. Why we are calling as a current asset? Cash. If we take example of cash, cash value always will be not same. It will fluctuate. Sometimes the value of the cash will be increased, sometimes the value of the cash will be decreased. For example, dollar, for example, rupee and dollar. So sometimes the dollar value will be increases to 60 rupees, 65 rupees, depends upon the market. So depends upon the dollar value, our currency value is also increase and decrease. So that's why we are calling as a floating asset. Float means the asset value will be increase and decrease. And here I already said investments. So owners always, they will not invest equally. First 1 year they will invest more money, or else they can invest less money. Means every year there is a no rule that they have to invest same investment whatever they invested in a first time. So those type of assets are called as current assets. And the next one, fixed assets. I already said furniture, machinery, land and building, these are all called as fixed assets. Now what is the difference between assets and fixed assets? See, asset is nothing but asset which has to be running in our business, on that we have to get some benefit. But fixed assets is nothing but it has to running in our business, and on that we have to get the benefit, and it has to run a long time. Fixed assets will run a long time in our business. Whatever we will purchase, whatever we will sell in a short period of time, those are called as current assets. But whatever we are using in our business, whatever we are spending a long time in our business, those type of assets are called as current assets. Next one, liabilities. So liability means what? Liability is nothing but a debt. Whatever we are taking something from some other person, those are called as liabilities. Liabilities we call as debts. Debt is nothing but a liability, debts. So whatever we are taking, for example, we are taking a cash or a goods or anything, whatever we are taking from some other person, those type of things are called as liabilities, because we have to pay in a future period. Those type of called as liabilities. And the next one, here you have capital. Capital means the owner, whatever he is investing in our business, the owner, whatever he is investing in our business, that investment is called as capital. All investments, any person who will invest in a business is nothing but a capital. Okay. And the next one here, sixth one is drawings. So capital means what asset? The owner, whatever he is investing in our business, that is nothing but a capital. Drawings is nothing but whatever owner is taking from the business. Owner is taking from the business. Taking from the business, it is nothing but drawings. For example, owner, he is investing, then that amount is called as a capital. For example, for his personal use. For his personal use, whatever he is taking from the business. For personal use, whatever he is taking from the business, whether it is in a form of a cash, or it is in a form of debtors, it is in a form of like goods. Whatever he is taking from the business, those type of things are called as drawings. And the seventh one is debtors. Who is a debtor? Debtor is a person who is always receive benefit from the business. Who is always receive benefit from the business. So debtor always take benefits from the business. He will not yet to pay any benefit to the business, just like a customers. Debtors are just like a customers. Okay, what is the who is a customer? Customer is a person who always takes something from the business. For example, when we go to any shop, what we will do? We will purchase anything. For example, if you purchase a pen or a brush or a toothpaste or anything, see, we will receive the benefit. For example, if he give any type of extra benefit. Extra benefit means 1 plus 1. If you purchase one thing, then he will give one more thing. It's more. That is nothing but 1 plus 1 offer. So debtor is a person who always receives benefit from the business, but he will not to pay. See, if he giving 1 plus 1, for example, one product cost is 100 rupees. So he is giving 1 plus 1, that's why you will not pay 200 rupees, only we will pay 100 rupees. Means we are receiving the benefit but we are not paying anything to the business. Those type of things are called as debtors. One is creditors. Creditor is a person who always gives benefit to the business. Creditor is just like an owner. Creditor is just like an owner. He always gives benefit to the business and yet to receive equivalent benefit from the business. Yet to receive equivalent benefit from the business. So I already said the example is owner. What the owner will do, first whatever he want to give the business, he will give everything to the business. Whatever investment he has to do, everything he will invest. After investing, what he will do, at last at the end of the financial year, whatever invested on that, he will take an equivalent benefit from the business. Those type of persons are called as creditor. Creditor is a person who always give benefit to the business and yet to receive equivalent benefit from the business. Those type of persons are called as creditors. And the next 9th one, debit and credit. I already said debtors and creditors, just same like that only. Debit is nothing but receiving aspect. Debit is nothing but receiving aspect. Credit is nothing but giving aspect. Debit, whatever we are entering on a debit side, that always should be receiving, and whatever we are entering on a credit side, that always will be a giving. So one side we have to receive something and another side we have to give something, then that is called as debit credit. So receiving aspect should be recorded on a debit side and giving aspect should be recorded on a credit side. And the 10th one, account. I already said in a first class, account is always in a which shape? It is on a T shape. Account is always in a T shape. So the left hand side whatever we are writing, that is nothing but a debit, and right hand side whatever we are writing, that is nothing but a credit. Whatever preparing by putting debit and credit, that type of is nothing but an account. Account should have one debit aspect and also another side that should have credit aspect. If we have debit and credit aspects, then that preparation is nothing but an account. Account is nothing but summarized statement of debit and credit. So one side we have to receive and another side we have to give. That is nothing but an account. 11th one, expenditure. Expenditure means whatever spending for the business. Owner, whatever he is spending for the business, those type of expenses are called as an expenditure. Expenditure is nothing but whatever we are spending, whatever owner spending, that is nothing but an expenditure. To run a business, first whatever we are purchasing, whatever we are taking, those all things, on that we have to invest some investment. So that type of investment what we are doing, we are spending to purchase something. So those type of expenses are called as expenditures. Here expenditures is of two types. One is capital expenditure and another one revenue expenditure. Capital expenditure is nothing but all fixed assets. So capital is nothing but, I already said, whatever the owner investing, that is nothing but capital expenditure. Owner whatever investing, on that we are purchasing some assets. So those type of assets are called as fixed assets. So that's why in capital expenditure all fixed assets should be recorded. And revenue expenditure is nothing but expenses like salaries, rent, those type of things are called revenue. Revenue is nothing but getting some source from the business. So whatever sources we are providing, those sources are called as salaries and rent. If we take in one building, on that we have to pay some rent. If we have some employees, on that we have to pay some salary. So those type of expenses are called as revenue expenditures. So in expenditure is nothing but whatever we are spending for the business, that is nothing but an expenditure. And the 12th one is income. So here whatever we are spending, on that whatever benefit we are receiving or a profit we are receiving, that is nothing but an income. Not only profit or a benefit, whatever we are getting from the outside, any more benefit or a more profit, that is also called as income. So income is also once again divided into two types. One is capital gain and revenue gain. Capital gain and revenue gain. On this whatever we are spending, on that whatever benefit we are getting, those type of benefits are called capital gain and revenue gain. General. Okay. General. I already said general is nothing but book of prime entry. General is nothing but book of prime entry. Prime is nothing but first. Whatever we are entered first time in our books, that is nothing but book of prime entry, or else it is also called as day book. Or else it is also called as day book. Day book means whatever we are entering day wise in our business, those are called as day books. So that's why general is nothing but book of prime entry. Prime is nothing but first time whatever we are entering, first time whatever we are recording in our business, that is nothing but prime entry. Day book is nothing but day wise whatever is happening in our business, each and everything we have to record the transactions, those type of transactions are called as day books. And the next one, here we have general entry. General entry means what? So in general we are recording, that is nothing but general. General entry is nothing but transactions. General entry is nothing but transactions. By putting debit and credit, by taking receiving aspect and giving aspect. By putting debit and credit whatever we are entering, that is nothing but a general entry. Okay. And the next one here, 15th one, ledger. Ledger is nothing but set of accounts. Ledger is nothing but set of accounts. I already said in the last class, ledger is nothing but set of accounts, and it is also called as book of final entry. After entering in a general, at last where we will enter? We will enter in a ledger. So that's why it is called as ledgers. Ledger is nothing but set of accounts. Here we are not preparing a one account. Here we are preparing n number of accounts. Like example, cash account, bank account, purchase account, sales account. Like this we will prepare n number of accounts. So that's why here we calling as a set of accounts. That is nothing but a ledger. And today's invoice. Invoice is nothing but it is just like a bill. Invoice is nothing but just like a bill. For example, think it is a bill. In the bill what we have? We have the company name, address of the company, email ID, phone number, and whatever products we purchased, the name of the products, okay, and the quantity, and the rate, and the amount, and the total. If any discounts are given, the discount. So it is a bill. So invoice is nothing but a bill. Why we are calling invoice is nothing but a bill? Here for each and every bill we have one number. We have invoice number. What we have here? We have invoice number. By knowing about that invoice number, we can able to say each and every information whatever the customer is purchased, how much he purchased, whatever he purchased, what is the rate, what are the discounts they provided. By knowing about the invoice number, here we can able to say each and every particular information regarding the bill, whatever the customer is purchased, that we have to say. That is nothing but an invoice. So this is nothing but accounting terminology.